Okay, the video I did on first time back trading strategy, when I spoke about order flow dynamics, okay, it's the first time I've introduced that term. And just as a reminder, order flow dynamics involves an appreciation of the main classes of market participants around a support resistance zone and the concentration and cluster of orders that are situated around that support resistance zone, okay? And we use that to understand part of the reason why the FTB works, okay, in terms of the orders that are represented, the orders that are present when price comes back in a certain manner to a support resistance zone, and then the subsequent price action and flows that are generated. Okay, now you can use the exact same concepts, but this time we're going to apply it to false breakouts. Okay, so when we talk about the first time back, we were talking about price having a breakout from a support resistance zone. So this time we're going to be looking at a false breakout from the same type of support resistance zones that we're looking at for an FTB setup. So it's pretty straightforward, but a true breakout is one where price materially closes below a clear support resistance zone on that time frame, and vice versa for a long breakout. A false breakout is one where price materially moves below that support resistance zone on that time frame, but then moves back up and closes back above that support resistance zone, okay, and vice versa for a long false break. Also known as fake outs, seller buyer traps, bear bull traps, but they all mean the same thing. So if we go to a chart example, if we look at this example here, we can see we've got a clear support resistance zone, price moves down, and we have a confirmed breakout. Same here, price moves below this support resistance zone, we have a confirmed breakout, okay? Same chart, if we look at these three, we have price moving below the support resistance zone, but on the same time frame, it closes back above. Okay, so that's a false breakout. We have the same thing occurring here. Price moves below, materially below, it closes back above. It's a false breakout. And lastly, the same thing here. Price moves below this support resistance, closes back above. It's a false breakout. Okay. So we know from when we spoke about order flow dynamics in the first time back trading strategy, we know what happens on a breakout. Okay, we know that buyers are placing their stop losses below this support resistance zone, and we know that breakout traders are entering their sell orders below this support resistance zone. Okay, so we know we have a cluster of sell orders as price moves below this support resistance zone. This is what leads to the breakout rush, which is exactly what I spoke about on the first time back trading strategy videos. Okay, now in order to cause a false breakout, price has to meet demand. Okay, so it's institutional professional money that is causing price to reverse. Okay, price is hitting demand at each of these swing points here that where price is reversed. Okay, demand causes price to come back above and close back above. Okay, and what does this tell us about the strength of demand here? We know that there are clusters and a high concentration of sell orders below this support resistance. So in order for price to be reversed back above there, that tells us that demand situated down here has to be very strong. Okay. Now, moving on from there, if we think about liquidity and we think about the professional money and the institutional money, i.e. the demand, and how people place orders in the market, if you've got a very large order and you just go and whack it in at market, the chances are you're going to get slippage. Okay, why does slippage occur? Because there's not enough liquidity at your price level to meet your demand. Okay, if I want to buy, say for example, an arbitrary number, 100 million at a certain price level, there has to be 100 million of orders of people sitting wanting to sell me those orders in order to fill my buy order at that price level. If there's only 10 million, then price is going to move up to find liquidity, and 10 million at the next level is going to keep moving up. That's why you get slippage. Okay, so if you have large orders and you want to enter the market, you obviously don't want to be paying up. If say this is 1.3, I don't want to be paying 1.32 up here. I want to be getting getting my orders filled as close to 1.3 as possible. So in order to do that, you need liquidity. Okay, price is always moving to find liquidity. You need to know where that liquidity is. And if you understand order flow dynamics, then you understand that areas like this, where price moves below a clear SR, we're going to have stop losses triggered, and we're going to have breakout traders entering short. So we've got a high concentration of sell orders. So if you've got a big buy order, this is a prime place to be entering that buy order to give you the best chance of not paying up, not having a worse average price, and getting filled at the price you actually want. Okay, so institutional money, institutional speculators can use the knowledge of order flow dynamics to enter their orders without achieving a worse average price. Okay, and understanding and appreciation of what orders are present here, that's just herd mentality. Okay, why are orders placed here? It's because the way the retail market and novice traders as a collective whole generally place their stops. They will generally place stops below swing points, above swing points, and below support resistance areas, where the breakout traders get involved upon price breaking a previously well-defined support resistance or previously well-defined swing point. Okay, that's just understanding and appreciation of the herd mentality. Okay, so we know what is going on in a false breakout in terms of what is actually causing the false breakout. We know what causes the immediate breakout. That comes from our first time back videos, and we know what is happening where price finds demand, and that fact it's got to be the demand here has got to be very strong to overcome the cluster and strong concentration of sellers is present below this support resistance. Okay, the next step is to understand what is happening after this bar, after the false breakout has occurred. What is happening afterwards in terms of the order flow dynamics? Well, if we think about who is now involved in the market, we know the buyers who had their stop lists below here are out. They've essentially helped to provide liquidity to the institutional demand sitting here. Okay, so we have institutional demand that's come into the market here. What about these breakout traders? These breakout traders that are sold there, expecting a big move down, price has been suddenly reversed very quickly. These breakout traders would not be expecting this. Now they are now caught on the wrong side of the market. Okay, and we also see people. We would know that people that trade support resistance will see this false breakout and say, "Oh, they won't necessarily understand it as a false breakout per se, but they will be looking at this support resistance saying, well, price is moving back up now. It's a time to buy again." So we're basically going to have new buyers coming in here, and we're also going to have those breakout traders who are now caught on the wrong side of the market are going to be looking to bail out. Okay, they are underwater, they're in negative equity, they are now looking to bail out. Okay, so we've got new buyers coming in, and you've got the breakout traders looking to exit. That gives a concentration of buy orders. Okay, so following a false breakout, we can expect price to continue in that same direction with good momentum. Okay, because we know there's a cluster of buy orders when price moves back above here. Okay. So going back to this slide, a false breakout is a result of professional money using liquidity created by novice traders, using the stops and the orders generated on the breakout. The byproduct of this is novice traders are caught on the wrong side of the market. So those breakout traders, they are caught on the wrong side of the market and they're looking to bail out. And this order flow provides us with a predictable price action. Okay, and a false breakout, when you're trading a false breakout, after the false breakout has occurred, you're essentially following the institutional and professional money. Okay, so if we look at some examples, we have a clear support resistance zone. We have a material false break. Price closes back below and continues lower. Same here, same thing here. A very clear support resistance, a very clear build-up of stops. When I talk about a clear support resistance, it's important that we're looking at clear support resistance zones. Why is that? Because at a clear support resistance zone, we're going to clearly have a better chance of having a build-up of stops, and we're going to have a better chance of a build-up of orders by breakout traders. Okay, the clearer a support resistance zone is, the more people are looking at it. Okay, so here we can see very recent price action here in terms of acting as resistance, and this is going to be clearly a case, an area where stops are going to be building up and where breakout traders are going to be looking to go long. Okay. Another example, if you looked at this previous example, some people would say, well, this is a pin bar resistance, Notice that on this one, this isn't a pin bar. This is no bar pattern at all. None that I would know of anyway. This is just a simple false breakout and a simple trading the order flow dynamics that we know is occurring at this support resistance. Okay, I'm not trading patterns. We're not saying, okay, oh, well, I just want to look for a pin bar like the retail crowd will be doing. We're looking to use our knowledge of order flow dynamics to know the price action that will result from that. Okay, and as we can see in this one, we have a strong move up, which is instantly reversed because of the false breakout. Okay. So a quick summary on that. A false break is caused by the search for liquidity. Okay. A clear false break involves traders being caught on the wrong side of the market, i.e. the breakout traders. This leads to predictable price action and allowed us to follow the institutional and professional money. Okay, we're looking for false break opportunities that clear support resistance areas, and I mentioned why. Okay, I'm not going to get into more than that at this stage. What I would say is I'm looking for clear support resistance areas. I'm looking for material false breaks. Okay, I'm not looking for tiny false breaks. I'm looking for material false breaks. Okay, that's the reason why I'll go into on another video. Okay, now that summarizes the order flow dynamics behind a false breakout. Okay, and it summarizes where we want to look at them. One area where we want to look at them. If you think about where else is the same order flow concentration going to be occurring, i.e. where will stop losses be clustered, where will breakout traders going to be going, looking to go long or short. Okay, well, the obvious place is support resistance zones, and the other one is swing points. Okay, swing high, swing low points. It's the same cluster of orders are going to be present. If we have a swing high, traders are going to be placing their stops just above that swing high from shorts, and breakout traders are going to be looking to go long on a break of that swing high. Okay, so we have the same order flow dynamics, and therefore we have the same ability to look for false breakout, swing high and swing low points. Okay, there's one thing we have to consider when we're looking at swing points is that a false break on a swing point could be supply or demand consumption. Okay, if you've watched the free videos on my website in terms of the price action videos, you understand the concept of supply or demand consumption, but again, this is something I'll go on to in a future video. So just some brief examples. We have a swing low. It's not a support resistance, there's only one swing low. Price materially breaks that swing low and it's duly reversed. Same thing here, a material break of a swing low, price is duly reversed. And look at we're looking at momentum with which price reverses. We know that price should move with good momentum following a false break because of the order flow dynamics that are occurring in terms of new buyers coming into the market and the shorts from the breakout traders getting squeezed and having to bail out. Okay, material swing low, material false break. Okay, just one final example, clear swing low, clear false break. Okay, I'm not going to go into more than that, but just to say we're looking for clear swing lows and swing high points, and we're looking for material false breaks of those swing low and swing highs. Okay, just like we were for support and resistance zones, we're looking for material false breaks, and we're looking for very clear support resistance areas and very clear swing high, swing low points. Okay, so this video is really just about explaining why a false breakout occurs and how we can potentially trade it, and the two main areas to be looking for the false breakouts. The next video will go on to discussing trade management, entries, stops and exits, and it will also go on to establishing the objective criteria you have to use when evaluating a setup. Okay, so for example, I mentioned supply, demand, consumption on a false break of a swing point. That's something we have to look at in a lot of detail. Okay, there's other things you need to consider when evaluating a setup. It's not just as simple as, well, we have a false break of a support resistance zone of a swing point, let's load up. Okay, there's other things you have to consider, and that's what I'm going to go on to in the next video, and also discuss trade management. And then there will be a third video which will discuss some advanced concepts in terms of entering at the source, entering before the false break and anticipating the false breakout. Okay.